Trend lines are one of the most basic yet powerful tools in trading. Just like push-ups or squats, it's easy to learn and hard to master. Today, I'll show you exactly how to draw and trade trend lines without any fluff. Let's dive right in. So, what's a trend line? Simply put, it's like a support or resistance line, but it's diagonal. Price never moves straight. It goes up and down, creating pullbacks. Those pullback points are exactly what we use to draw our trend line. Many beginners mess up trend lines by choosing the wrong points. Here's a simple trick to avoid that. The correct high or low, also called an extreme, is a candle that is higher or lower than the two candles before and two candles after it. Another important point. A trend line with just 2 points isn't strong. It can be broken easily, but a line connecting 3 or 4 points? Now that's a strong trend line. If a strong trend line gets broken, you can bet the trend is likely changing. Here's my personal tip. Instead of drawing a single thin line, always draw a small zone. Why? Because price loves to trick us with fake breakouts. A small zone will help you avoid these false signals and make your trade safer. Remember, there are 2 types of trend lines: short-term local trends. These last from 1 to 10-minute charts. Long-term global trends. These appear on charts from 1 hour and above. Long-term trends rarely change unless there's big news or global events. Here's a bonus tip. If the time between price touching your trend line gets shorter and shorter, and price keeps testing that line repeatedly, you can expect a breakout soon. Lastly, the steeper your trend line is, the less reliable it becomes. A gentle, steady trend line is much stronger. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on Quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. Now, let's get practical. When it comes to trading trend lines, we've got 2 simple scenarios. Either we're trading a breakout of the local trend line, or we're trading a bounce off of it. But how do you know which one to choose? You should always look at the global trend line first. Here's the golden rule you gotta remember. Always trade in the direction of the stronger trend. So, what does that mean exactly? Well, if the global trend is going up, and the local trend is also pointing up, then you're looking to trade a bounce off that local line. But if the global trend is going up, and the local trend is moving down against it, then you're looking to trade a breakout of the local trend line. Honestly, this is the most important rule in trendline trading. And guess what? About 90% of traders don't even understand this concept clearly. And look, don't stress too much if your trendline drawing isn't perfect, or if you're worried you might have slightly messed it up. The truth is, how perfectly you draw your line matters way less than your decision-making logic. Get your logic right. Trade with the strong trend, and you're already ahead of most traders out there. Let's look at some situations. Situation 1. Short-term and long-term trends move in opposite directions. In this case, draw both trend lines. Wait for the short-term trend line to break with a strong candle. enter a trade in the direction of the long-term trend. Situation 2. Both trends move in the same direction. If your long-term trend line is smooth and the short-term line is steep, wait for the short-term line to break. Enter when you see a strong candle breaking the short-term line. Usually, price moves about half the distance of the previous sharp movement after a breakout. Situation 3. Trading breakouts early in the day. This can be risky. I recommend waiting until you have a clear trend line with at least 3 touches, then follow situation 1 or 2. If candles get smaller as price slowly approaches your trend line, it's likely to bounce off, not break through. Use this knowledge to enter trades following the trend. Personally, I love trading with long-term trend lines because they're reliable and simple. Here's how. Find a clear, long-term trend. Wait for a pullback to your trend line. If price can't break your line, enter a trade in the direction of the trend. A bonus signal is a reversal candlestick pattern at the pullback. That makes your trade even stronger. Once you master drawing trend lines and support resistance levels, you'll start noticing chart patterns. These patterns can greatly improve your trading strategies. By the way, there's already a video on chart patterns and support levels on my channel. Be sure to check it out. That's all for today. If you liked this video, hit that like button and subscribe for more. Lots of great stuff is coming up soon. Good luck with your trading, and I'll see you next time.